As of Sunday, May 3, 2026, the market is currently closed for the weekend. AMKor Technology Inc. common stock, trading under the ticker AMKR on the Nasdaq, finished the last full trading session on Friday, May 1, 2026, at a price of 71.09 per share. This represents a solid intraday gain of 1.34 or approximately 1.92% from the previous open. While a 2% move might look like a standard day in the semiconductor world, there is a massive gap between what the broader market expects from this company and the technical reality unfolding behind the scenes. Most investors see AMKor as just another service provider in the chip supply chain, but the reality is that the company just successfully priced a massive $1 billion convertible debt offering at a 0% interest rate. When a company can convince institutional lenders to give them $1 billion for 5 years without charging a single penny in interest, it tells you that the smart money is betting on a very specific outcome that hasn't fully reflected in the daily price action yet. The expectation right now is that the semiconductor industry is hitting a plateau because of high interest rates and a cooling consumer electronics market. However, the reality of the recent $1 billion offering, which is set to settle on May 5, 2026, shows an insatiable institutional appetite for AMKor's specific niche in advanced packaging. This capital is being raised at a conversion price of roughly 106.37 per share, which is more than 50% higher than where the stock is trading right now. This creates a curiosity loop that many retail traders are missing. Why would institutions agree to terms that essentially bet on a 50% upside over the next few years while foregoing interest entirely? The answer lies in the shift from simple chip manufacturing to complex integration. We aren't just making chips smaller anymore, we are stacking them, and AMKor is one of the few players globally with the scale to handle that transition. If you are looking at your individual brokerage or checking your positions on the Robinhood app, you've likely seen the volatility in the tech sector lately. Stocks like Nvidia stock or Apple stock often steal the headlines, but the backbone of those companies relies on outsourced semiconductor assembly and test, or OSAT firms like AMKor. The common ground most investors share is the belief that AMKor is a boring cyclical play. The contrarian take is that AMKor is currently transforming into a high-margin technology partner rather than a low-margin service provider. Their recent first quarter 2026 earnings report, which dropped just a few days ago, showed record revenue of $1.68 billion. That is a 27% jump year over year. While the market was expecting a modest showing, AMKor delivered an earnings per share of 0.33, crushing the consensus estimate of 0.22. This 50% earnings beat is a clear signal that the underlying business is running much hotter than the surface-level valuation suggests. For those of you using SoFi Invest or Interactive Brokers to manage your portfolios, the trading volume on Friday was particularly telling. Over 10.9 million shares changed hands, which is nearly triple the average daily volume. This kind of institutional activity usually precedes a major shift in price discovery. Large funds are likely rotating into AMKor as a way to play the infrastructure side of AI without the extreme premiums found in the primary chip designers. When you look at the Schwab Intelligent Portfolios or other automated investing tools, they often overlook these specialized mid-cap names in favor of broader tech ETFs. But if you are doing self-investing and looking for investment help that goes beyond the obvious, you have to look at the capex. AMKor is planning to spend between $2.5 billion and $3 billion this year on capital expenditures. They are building out a massive new campus in Arizona and expanding their test facilities in Korea. This isn't the behavior of a company worried about a recession, it's the behavior of a company preparing for a decade of dominance. The daily swings we've seen in AMKR recently are tied heavily to the broader semiconductor momentum, but the internal strength is coming from their advanced products category. This segment, which includes things like flip chip and wafer-level processing, brought in $1.37 billion of that $1.68 billion total last quarter. Mainstream legacy products are essentially a side business now. The core growth is coming from the communications sector, which surged 42% because of the demand for premium smartphones that require incredibly dense packaging. Even with some softness in the PC market, the computing segment grew 19% thanks to AI data center revenue hitting record highs. This is the tension at the heart of the stock. The market treats it like a commodity, but the earnings power is increasingly coming from specialized high barrier to entry technology. Take a second to drop a comment below. If you are an active investor, how many shares of AMKor technology do you currently hold? Or are you looking for a better entry point closer to the 52-week low? Seeing how many of you are actually positioned in these mid-cap tech leaders helps us gauge the retail sentiment against these big institutional moves. To understand where we go from here, we have to look at what AMKor actually does. They are essentially the world's premier
clean room for hire. When a company like NVIDIA or Qualcomm finishes a design, they don't just have a finished product. They have a wafer that needs to be cut, tested, and packaged into a form that can actually be soldered onto a circuit board. AMKor provides these critical steps. Their business model is built on long-term relationships with the top 10 semiconductor companies in the world, who account for nearly 70% of their revenue. This creates a moat because switching providers at this level of precision is incredibly risky and expensive for the chip makers. Historically, AMKor was seen as a low-margin business, but as chips become more complex, the packaging becomes a larger part of the total cost. This allows AMKor to expand their margins, which we saw in the first quarter with gross margins hitting 14.2%, well above the high end of their own guidance. Looking ahead, the future outlook for AMKor is anchored by their second quarter guidance. They are projecting revenue between $1.75 and $1.85 billion, with a net income ranging from $105 million to $130 million. If they hit the high end of that range, we are looking at another significant quarter-over-quarter growth spurt. The primary risk factor here is the high valuation relative to historical norms. With a price-to-earnings ratio sitting around 40, some analysts argue the stock is overvalued. However, when you factor in the 0% debt they just secured and the $300 million share repurchase program they just authorized, it's clear the management team believes the current price is a floor, not a ceiling. They are literally putting their own capital to work to buy back shares while simultaneously raising $1 billion in free money from the debt markets to fund expansion. Whether you use Fidelity, Robinhood, or Interactive Brokers, the lesson here is about the disconnect between narrative and data. The narrative says the chip boom is over. The data from AMKor's latest 10Q filing says the boom is just moving into its next phase. We are moving away from a world of simple chips into a world of chiplets, where multiple small chips are packaged together to act as one. This is AMKor's backyard. They are the ones who make that physical connection possible. If you are tracking this through investing sites or checking your Fidelity mobile app for the latest updates, keep a close eye on the Arizona project. Bringing this kind of advanced packaging back to U.S. soil is a massive tailwind that could attract even more government incentives under the CHIPS Act, further de-risking the massive capex they are currently committing to. In summary, the reality of AMKor Technology in May 2026 is a company that is aggressively outperforming its own expectations and the market's cautious stance. They have record revenue, a 50% earnings beat, $1 billion in new interest-free capital, and a share repurchase program that signals extreme confidence. While the stock sits at 71.09, the institutional bet on a 106.37 conversion price suggests that we are in a period of consolidation before the next major leg up. The expectation was a cooling tech sector. The reality is a fundamental shift toward advanced packaging that AMKor is perfectly positioned to capture. As we move into the middle of 2026, the contrast between those who see a cyclical service provider and those who see a critical infrastructure partner will likely define the winners and losers in this specific corner of the market. Keep your eyes on the trading volumes as that $1 billion deal settles next week, as that will be the first real test of this new pricing floor. Like this video, comment your thoughts, share with your friends, bell, subscribe for more updates.